Well, thank you for having me. I really appreciate the opportunity, and I'm sure you've learned quite a lot of ways to make money over the last 2 days. Now I'm here with the, well, they saved the best for the last, but it's the good news, bad news kind of story. The things have changed in the last year. So you may have heard in the last year the IRS has been a little bit more aggressive about trying to collect taxes on cryptocurrency transactions. And so that started with the Coinbase situation. And so that resulted in some IRS compliance letters, a potential new question on the 1040 for 2019, reporting under penalty of perjury, also a possibility on 2019 tax return, the definition of cryptocurrency being property as opposed to a commodity or stock investment of that nature, and that creates some different tax problems. And of course, being paid as an employee or as a business and receiving income in the form of cryptocurrency has some different tax consequences. And then we'll work our way all the way around to what the current recent IRS guideline information that just came out within the last month. So in 2018, Coinbase got hit with a subpoena to provide the IRS with information on who their clients were. So after a bit of time, they complied, provided 14,000 names. Of those 14,000 names, 10,000 received a letter from the IRS. And I don't know if anybody here has received a letter, but...
Welcome to the Monarch Wallet, a truly decentralized cryptocurrency wallet that supports over 3,000 cryptocurrencies. And for merchants, it includes Monarch Pay. Buy and sell from your bank or credit card. Earn up to 8.2% interest and soon get loans. A built-in decentralized ERC20 exchange. Portfolio tracker, market cap, and news. Users own their keys and seed. Biometric security. Go download the Monarch Wallet today.
Here are the 3 letters that, this is the first one. This letter says, we've been told that you've traded in cryptocurrency and you didn't report it on your tax return, and we'd like you to do that now because you may owe us some tax revenue, or maybe not, maybe you had a loss. But either way, we know about it, we want you to report it. The second letter that went out was one that was considered a soft notice that says, well, we know you're doing it, but we're not sure that you have anything to report, but we're just making you aware that we're aware. And the third one says, not really sure if you're doing it at all, but if you do it, we're going to find out eventually, so let's just go ahead and start keeping track of it so we can pay whatever taxes are due or take any losses that you may benefit from. And the next thing that the IRS decided was, and this isn't finalized yet, but the 2019 tax return, Form 1040, they change it every year. You know, you may remember last year there was a lot of changes that were confusing. But this year they want to add a little bit of language that says, it asks you the question, did you trade in cryptocurrency in 2019? Yes or no? And then, of course, once you answer that question, you're doing it under penalty of perjury. So that means that if you told them that you didn't, but you really did, that's a problem. If you told them that you did and you don't report it, well, they're going to ask, well, why did you check yes? And then if you don't answer at all, well, I don't know what they're going to do with that, but they may come back and ask you to clarify. So this brings me to the next area, which is what is a crypto taxable event? And this is where there's been a lot of confusion because one of the unique things about cryptocurrency is that you can buy directly from one currency to another. I can go from Bitcoin to Ethereum. I don't have to go Bitcoin, cash, Ethereum. If I want to do that in the stock market, I have to buy my P&G stock, sell my P&G stock, and then buy whatever I want to buy next. So I've got an opening and a closing transaction that I can use to calculate what my profit or loss is. So you actually have that happening, but it's not as apparent. So for example, if I buy Bitcoin and then I trade it for another currency, that's a taxable event. I have a gain or loss on that transaction. I may not know how much I've got in the gain or loss because I need to keep track of that purchase in US dollar value and the sale in US dollar value. And that's where a lot of people kind of fall through trying to come up with what that gain or loss might be just because of the sheer volume of trades that they may be doing. The second area is if I pay somebody in Bitcoin, well, then that person received that as a source of income, payment for services or for goods. And that's like whether I was paid in US dollars or in cryptocurrency, I have to report that as income. The full amount of that is income. And the last thing is in terms of mining, that's the other area. Whatever you mine, that income is fully taxable as well. Those two events, mining and payment for services, they get reported on Schedule C, sole proprietor, unless you're doing this through an entity like an LLC or S Corp or something like that, or partnership. The sale of currency itself, those transactions are reported on Form 8949, and then they go on to Form Schedule D of the tax return, which is where you report your gains or losses. So a sale occurs when you trade one coin for another, you withdraw funds in fiat, US dollars here, or you're using crypto to make a purchase. Non-taxable events, if you buy and hold a currency, or if you transfer it from one wallet to another or from one exchange to another. So if I have Bitcoin in this exchange and I just move the Bitcoin from here to here, that's not a taxable event. I've just moved its location. It's like switching pockets. So nothing taxable due in that situation. But what you need to track is the date and time of the purchase in US dollars and the date and time of the taxable event. And the value of the currency in US dollars at the time of transactions for the exchange for another currency, direct purchase of goods, or withdrawal or cash. Now that's a lot of information to try and keep track of, but I'm going to give you an example of a complex transaction here. So a taxpayer buys a Bitcoin to make online purchases without the need of a credit card, buys the one Bitcoin for $10,000. And I made them relatively straightforward numbers for easy calculations. Later, that taxpayer uses $5,000 worth equivalent of Bitcoin to buy something. So now we have a taxable event. We have to calculate what is the gain on that event. So we know that we bought Bitcoin for that one coin for $10,000, and we know that we used 5,000 of it. But at the time of the purchase, that $5,000 that he spent, Bitcoin's value had gone up to $12,500. So if my Bitcoin, my one Bitcoin, went up to $12,500, how much of it would I have to sell in order to get $5,000 out of it? And the answer to that is 0.4. So now we know that I sold 0.4 of my Bitcoin. I still have 0.6 left. What I need to now know is, okay, if I sold $5,000 worth and my cost basis is 0.4 Bitcoin and I paid $10,000 for the one Bitcoin, my cost basis is $4,000 on that sale that I just made, worth $5,000. So I've made a $1,000 taxable gain. Now, that is a complex step of issues that come up with that kind of transaction. If I'm just buying Bitcoin and selling Bitcoin, if I bought it and sold it and cash was both ends of that transaction, well, that's easy because I got a number and I got another number and I know what the beginning and the end was.
Welcome to the Monarch Wallet, a truly decentralized cryptocurrency wallet that supports over 3,000 cryptocurrencies. And for merchants, it includes Monarch Pay. Buy and sell from your bank or credit card. Earn up to 8.2% interest and soon get loans. A built-in decentralized ERC20 exchange. Portfolio tracker, market cap, and news. Users own their keys and seed. Biometric security. Go down with the Monarch Wallet today.
But it's when I take multiple steps. When I buy Bitcoin, then Ethereum, then Litecoin, and I keep on going down the line. Each one of those is a separate taxable event that needs to be tracked. And so that's where a lot of people kind of get hung up in the weeds because there's a lot of data that you need to be capturing that is going to help calculate that. And without that data, in a usable format, it's practically useless. I've seen people send me spreadsheets that I look at and I go, there is no way I can figure out what you did here because we're looking for information that's so specific that we need a better way to kind of calculate the gain. And that means that you need to track each coin separately. So if you buy Bitcoin, we need the purchases, we need the trades, and then we need the withdrawals. 3 separate files just on Bitcoin. And if you bought 20 other coin, each one of those coins, we need the files for those as well. So that's the only way you can really get an accurate picture of what the gain or loss might be on the taxable event. And then we come to the new guidelines that the IRS put out. And these may not mean much to people who aren't familiar with accounting methods, but FIFO is first in, first out. LIFO is last in, first out. And the new thing is that IRS says lot sales will be acceptable. Now, first in, first out means that I bought this Bitcoin. That was my first purchase. And whenever a taxable event comes in, that's the Bitcoin that I'm going to go back to determine what my cost basis is. FIFO, as opposed to LIFO, last in, first out, is saying that it was the last Bitcoin that I purchased that is the first one I'm going to use to calculate my gain. So we're going from one end to the other. Now, you have to use one method or the other consistently. You can't say, I want to use this method on this day, I don't want to change to this method. You can't change back and forth because they got a problem with that. But what you can do is something different this year, and that is lot sales. And that means that the IRS is now going to allow you to take a specific Bitcoin and say, I want to match that Bitcoin that I purchased to that sale. Instead of having to go back to the beginning and go through first one in was the first one out, or last one in was the last one out, now they're going to allow you to choose lots. And the benefit of that can be that you can help create a gain or loss against other assets that you might have profit or loss on that will determine which method is going to be best for you. Now you can try each method. Once you establish that, you need to stick with it. And you also need to use a consistent method for determining the valuation of the asset when it was sold, exchanged, transfer, whatever point a taxable event occurred, however you're going to determine what that value was in US dollars, you need to be consistent with that. Like if it's one exchange that you're using and it's like on this date and time, this is what crypto, Bitcoin was selling for. So this is what Bitcoin is going to be, from now on, I'm using that exchange to determine the valuation of each of my trade dates. Now this really becomes a problem in bot trading because of the massive number of trades that take place. To go back and manually do this for each transaction would be impossible. So there are services out there that will provide you with the ability to track this information in real time, so that way, when you wait, if you wait to the end of tax season, or when it's time to file taxes and you're trying to start to figure that out, then it's just too late. I mean, there's too much work to be done, and I've spent the last couple of years just really pulling my hair out, trying to figure out how I can make any use of some of the data that I have. So my suggestion is not to wait until you are ready to file your taxes to start figuring out what you're going to, how you're going to do this, but from the beginning, or even if you're in the middle, catch up at this point in time and get 2019 on track so that that information is already flowing into some of the services that are out there. And there are a few, CoinTracker, Coinbase also does provide a calculation for you on what your gain or loss is, but some of these are going to be limited and not give you the ability to use the lot sales method for calculating your gain or loss. So ideally, what you want is something where all those transactions are going to be coming in, separated, sorted by currency type, and also you want to be able to track the flow of the source of that coin from its inception. So if I mined the coin, my tax basis is whatever it was worth when I mined it, and I pay tax on that as self-employment income. But now I hold that mined coin in my portfolio, and my tax basis is the amount of US dollars I claimed on my income tax return for that mined coin. Now, whatever I do with that coin from this point forward, I need to be able to track each step of the way, whether it was sold for cash, traded for another coin, or paid to somebody else for services that were rendered in that other example that I gave you. Now, the other thing is that sometimes you'll move money from one wallet to another wallet, or one exchange to another exchange, and it's important that you actually capture the flow of that coin from one place to another in order to accurately be able to calculate what the gain might be, because that does come into play, because especially if you're using lot sales as your method of calculation, because if it was in this wallet and now it's in this wallet over here, well, I need to know when that moved and is that the lot that I want to use. So one of the newer services that I've been working on with a vendor will take that into consideration. So it'll go back and track the traffic flow of your currency from one wallet to another, one exchange to another, and that's going to give you the best option for using the last method, which is lot sales, or determining which one of these methods is the best one for you. So I've tried to give you an overview of where we are, how we got here, and I thought what I would do is just answer questions, because I'm sure there's a lot of people, maybe nobody has a question, but if you have questions while I'm here, I'm happy to answer anything I can. Yes.
Ladies and gentlemen, I bring you Crow Trader. No longer do you have to be a power trader to make profits in the market. CrowTrader is easy to use, powerful, and customizable. An algorithmic cryptocurrency trading bot that sounds difficult, but makes automated trading a breeze. 6 powerful trading strategies, including Bollinger Bands, EMA Sniper, Ichimoku Cloud, Ping Pong, and others, with more to come. Complete backtesting for every market pair so you can see the effectiveness of a strategy using historical price data. Customize your strategies to operate the way you want them to, and let CrowTrader trade the market while you're sleeping. Save and share your customized settings or load settings of other users from within the community. You are never alone. Tweak your settings until content for best earning potential, and then turn on paper trading to find out how effective your strategy is in real time without risking any capital in your experiments. Run CrowTrader on your favorite exchanges such as Coinbase Pro or Binance, with new exchanges coming soon. With CrowTrader, you are never alone as our growing community aims to help one another find success in the market. Once content, turn on live trading for your market pairs and let CrowTrader get to work improving your position using base pairs such as Bitcoin, US dollar, or Ethereum. Get CrowTrader now at crowtrader.com and start trading today.
So once you connect, so whichever exchange you're using that bot on, and you connect that exchange to one of the services that is going to capture that flow of data. So that data is being generated and is essentially being streamed. You just have to be able to capture it. So you would need to connect your account to one of the services, including the one that I'm creating, as an option, so that that data flows in and then that calculation is done for you. I mean, to manually do it, it isn't really feasible. But to connect it, it's kind of like the way QuickBooks works. You can connect QuickBooks to your bank, and QuickBooks will send every check that goes through or every transaction that goes through to QuickBooks, and then you just go through and have to identify what it is. It's the same idea. The exchanges have the data, the bot is doing the trading, so each transaction that's being created, the data is there. It's just using a tool to collect it. And then that tool having the ability to sort it out and figure out what the gain or loss is on it. Does that make sense? So you can do it. It's there. I'm just saying you definitely want to do that rather than trying to figure it out yourself. You're still, yeah, because once you're closing out that position on whatever coin you owned. And so therefore, if I'm going to use Bitcoin because it's just the most common. So on that day, I had closed out a portion, let's say, of my coin, and that portion has a US dollar value at the time and moment that I did that transaction. And that's what needs to be captured, because now I'm moving into another asset. So it's opening and closing a position. It's similar to actually selling like foreign currency. Only the difference here is what's unique about cryptocurrency is that you can go directly. Like I can buy US dollars, I can buy yen. If I buy yen and close out my yen, it has to close out, comes back as US dollars, then I can buy something else. And that's the unique nature of cryptocurrency, is that you don't have to do it that way. Well, in regular stocks, it's called a wash sale in regular stocks, but that's not really the same rules don't necessarily apply. So yeah, you can take that well, there is a limitation on what you can do in terms of like closing out a position and buying it back. Those wash sales rules still do apply. I think I had that conversation before, maybe. So yeah, so if you wait 30 days and then reestablish the position, then that isn't an issue. Okay, so you have to wait, yeah, right. Now, it doesn't prevent you from buying another currency. It's just that one. Because think of each currency like it was its own stock. If I bought P&G stock, and sold P&G stock, when I reported that on my tax return, I would have a capital gain or loss for P&G stock. And if I bought Apple stock, it'd be the same thing, it'd be separate. The same thing is true for each and every coin. So if you trade 30 different coins, then each one of those has its own separate calculation. Well, there's a couple of things there, actually. So if they're an employee and you're paying them on a W-2 versus an independent contractor, okay, on a 1099, okay. So on a 1099, which you would be required to issue if you paid them more than $600 in value of US dollars, you would establish a method for determining that the closing, like at 5 o'clock, it's not closing, but at 5 o'clock on, Friday of every week, whatever that benchmark, that exchange that you decide you want to use, that valuation is, and you just stick with that as a uniform method, that's acceptable for determining what the US dollars would be, so that when you issue the 1099 at the end of the year, you would be converting all of that into US dollar transaction, because the government wants to see it that way. Yeah, they don't want you to see they don't want to see a 1099 that says Bitcoin on it. Yeah, they won't do anything with that. So, but you have to establish a method that and stick with it. And that way, if the question ever arises, well, how did you come up with this value? You can say, well, okay, here's what I did. On Friday at 5 o'clock, I went to this exchange, look at and that's, or whatever payday is. That's the way I would probably do it, so that you're doing it uniformly. That's all that matters. Thank you. You're welcome. That's correct. That portion of the coin that you sold. So, and I'm calculator dependent, so I won't try and figure it in my head. But in that example, if I sold 0.05 Bitcoin, it's just that portion of Bitcoin that is included in the taxable event. So I don't have to calculate the gain on everything, because I still have 0.95, let's say, okay, Bitcoin, and that's not created an event yet. But yes, when I split that off, if I bought 20 different coins out of that one Bitcoin, each one of those would create a taxable event. And if I did them at different times, it'd be a different potential gain calculation. Did I answer it? Okay, all right. Yes. Actually, that's fantastic, because anything that happens inside an IRA or 401k, whatever, there are no gains and losses until you take it out. So you don't have to keep track of everything I did so I put in $10,000 because it's an IRA. Whatever money I take out, I'm going to pay tax on it. If I turned that $10,000 into $1 million, well, I'm going to pay tax on $1 million when I take it all out. So the difference there is I don't need to track each transaction as long as it's in that tax qualified account specifically. Right. Right. That's it. And that's the same thing with stocks. If I buy stocks in my 401k or in my IRA, whatever they increase or decrease or whatever, it doesn't matter. It's just the money that I end up taking out at 59.5.
And in a Roth, you don't have to do anything, right?
If it's a Roth IRA, yeah, that's it. Then it's all tax free. Yeah. So that's even, especially the younger you are, the more value there is to the Roth IRA. Doesn't matter where your assets are. I mean, if it's somewhere else and it's convertible into yen, okay. So on that day and time, I can convert it into yen or won, whatever it might be. I figure out that value, and then I apply the exchange rate to the US dollar at that point in time.
So if you can't exchange it for anything else, because it's not on any other exchanges, it's net new, you can't exchange it for any other.
Okay, you're saying, well, I understood the question to be, it wasn't available here in the United States, but you could exchange it somewhere else. The thing is that it's a property, personal property. So it wouldn't apply to like foreign currency exchange, but it does apply in case of cryptocurrency. because if you're taking a loss and you immediately get back in so that you can capture that loss and buying back in, I did look this up specifically, actually for somebody, and it's excluded as a wash sale. Well, and then I would go with their, if as long as they can support what they say. I mean, that's the bottom line. Yeah, is that you want to be able to support with research and say, the IRS asks you a question, you say, well, what made you determine this? And it's like, well, I relied on this set of information. Yeah, more common in that area, and then they are definitely excluded for sure in stocks. I believe that there are better ones out there than better ones than that one. Well, I think that Zen Ledger is a better one, and I think that one that I'm working on is going to be even better. It's going to be number one. So, and you can contact me at that email address, or you can go into my website, mycryptotaxguy.com, and you can sign up for our newsletter, or you can email me, and I'd be happy to let you know when that's available. But what we would do is we'd set up an account where you would connect your various exchanges and wallets, and that data would be extracted for you. But I found some issues with CoinTracker, but it's, nothing is perfect, primarily because this is also new. I mean, the problem has been that no two exchanges have provided data the same way for every client. So, in other words, Coinbase will do it one way, but then another exchange, like Binance was doing it another way, and Bittrex was doing it another way. All those different exchanges had their own way, and some of them, you had to go to customer service to request that they send you the files of your withdrawals, the three that I had up there before. So we're trying to move past that into the future in terms of seeing that the IRS has this in its line of sight, and there is currently no uniformity, at least having the ability to capture what data is available and put it in a usable format so that you can comply with the IRS requirements. Okay, well, so donating and gifting are not necessarily, so let's say it was a charitable trust and I made a donation. Okay, well then I could donate up to 50% of my income and have it be tax deductible if it was a 501c3 or other charitable entity. Okay, if it is a 501c3, then yes, up to 50% of my income. So depending upon what the value of the Bitcoin is at the time, there may be a portion of it which you can't take that year, but you could carry it forward. So that's does that help? Okay, good. Okay, so that's a good question. So any transactions that you do that are held for less than 12 months are taxed as ordinary income. So whatever your tax rate happens to be, that's the tax rate that you're going to pay on those transactions. If you do hold it for more than 12 months, and this is the same thing for stocks, then it's considered a long-term capital gain or loss, and that long-term gain is taxed at a maximum of 20%. It actually is a gradual rate. So depending upon what your other income was, it could be taxed at less than 20, but it could start out at 10 and then go to 15 and then progressively work its way to a maximum of 20 that on a long-term capital gain. The 10,000 people that got letters, some of them, Coinbase essentially sent the IRS information that said these people sold $700,000 worth of Bitcoin or whatever. Okay, so now the IRS is saying, okay, well, you sold $700,000 of something, so, and I know you don't want to pay tax on $700,000, so now we need to know, you need to tell us what the cost basis was on those transactions. So yeah, in some cases, they know how much was sold. Some cases, they only know you had an account. And because this was done by subpoena, not by traditional reporting methods, if you open a brokerage account at Charles Schwab, at the end of the year, you're going to get a 1099B and that 1099 DIV, and those same documents are being sent to the IRS. So the IRS already knows, here's how much you received in, say, stock sales on a 1099B. Okay, they know, and then some of those stock sales are now also being reported. You'll notice on that form from your brokerage house where it says non-reported and reported. So they're calculating the gain for you. I mean, my hope is that since the IRS is focusing on this industry, that it's going to cause the industry to move in the direction to use similar methods of reporting as to what your brokerage houses will do. But to answer your question, which is, well, what do I do about the past? Well, and that is a challenge. I mean, I can't give you the right answer. I can only give you what the IRS would accept, and that is, I tried, and here's how I tried. And that is to say, I used this information, I relied on some systematic method for determining what that gain or loss might have been. I don't think that they're going to know because I think that they're just as confused by it all as anybody in terms of the tax aspect of it. All they know is that you might have had a gain and we want our money. So. Well, it's only a loss if you've sold it, right? So, and then using that method, that may present problems because, again, it would be they would like to see each coin kept. They don't know unless they audit you and they ask you to prove how you calculated it, because it unfortunately comes back to you. It's kind of the reverse. You're guilty until you prove yourself innocent in this particular case. So, and then the other thing about the IRS is that there's actually a law that says that you cannot intentionally confuse the IRS. Okay, so right now, nobody's necessarily reporting that mining income to the IRS. So in theory, it doesn't exist, but it really does, because the government requires you to report any income you receive. If you were paid for services in the form of chickens, then you would have to report the value of those chickens. Or if you were paid in gold, you'd have to report the value. It doesn't matter what it is. If you get paid money, it's your responsibility. So what you're thinking about is that, okay, well, nobody's telling the IRS that I mined this much in coin, but it's still your responsibility to disclose that information. And the answer to that, the back end of that question would be, they would eventually potentially find out, in the case of an audit, if they found out you had that account and uncovered it at that point in time. So even though it's might not being reported to them right now, and they may never even know, ever, the fact is the possibility exists where they, in the case of an audit, would uncover it, and then that would create a different problem. So, I mean, I'm required to tell you that whatever you're paid, and whatever you're paid in, it's your responsibility to include that income on your tax return. Yeah, that's right. Well, in that case, if the neighbor's writing, that's what happens sometimes. But then you could get it could be a gift. There's other ways to do that. But again, it comes back to the documentation that supports the stand that you've taken, and that's the key to it all. Yes, sir.
So you're saying that three methods, you get to choose between
Ye-
first in, first out, last in, first out.
Lot sales. But you have to stick with, okay,
So assuming that you're sticking, all right, so the next thing is, explain the lot sales a little bit.
okay.
You're just choosing which one you want to take.
Essentially, yes. You're saying I owned this Bitcoin at 7,500 US dollars, and I own this Bitcoin at $10,000, and I'm going to use this one against the sale instead of this one. I mean, it's just a question of whichever you feel works out better for you. But keep in mind, once you choose that method, you're stuck with it.
So just for that, you had a simple
Yeah.
example, let's say you had purchased three Bitcoin. One at this price, one at a much higher price, and one somewhere in the middle. Now you're spending it and, selling it or whatever. If it's, so if you took it from the one that was the highest price first, and took it all the way down to where you used that one up,
Right?
and then started on the second highest
Yeah.
price,
You c That's legit, yeah.
continue down
Right.
that highest.
Right, right. I mean, you can pick, it doesn't have to be the next, you can pick any lot along the way, right. But if that works out that way, sure. Right, 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 yeah. Yeah, it's still a taxable event. It's the same thing if I had my money in my Schwab brokerage account and I sold P&G stock and left the money sitting in the account. It still enters cash, but I still have a taxable event. So yeah, it's whether you pull it out or not, it's a taxable event. So yes. Well, thank you very much for the opportunity. I wish you all a great deal of success. And if you have any questions, feel free to contact me. Thank you.